Today I will show you the whole guide from the weekly chart analysis to pinpoint entries and how to avoid the trap. The reason why so many traders took a loss this week on NQ. First, we start on the weekly time frame. When you zoom out a little bit, normally you can see without a doubt that the weekly is in an uptrend, but to make sure, we mark the last break of structure. Take the last high and then wait to a significant pullback, and then you have to wait until the last high point gets taken out with a candle close. This is the easiest way I can describe it. And then the lowest point, basically you can draw a box in this case, and the lowest point, what caused the breakout, this is basically the new swing low. The new higher low from the weekly chart. But this doesn't matter too much for now. Maybe I can make another video in the future. As you can see, the weekly made a break of structure to the upside. This is pretty clear for everyone, I guess. So we can, from this perspective, we only think about longs, When we go one step down to the daily chart, daily time frame, basically, as you can see, this is also, for me, this is also the daily swing structure. Why? Because this is the most significant daily pullback in the last time what occurred. And then the daily only made small little steps to the upside, as you can see. So as I mentioned already in the last video, this small steps to the upside, this is for me, it's internal structure, and this is swing structure. So basically this is also for me the daily swing. So also from the daily perspective, maybe we can do it with a table. So we have the conclusion at the end, and you can see it clearer. So at the beginning, we saw that the weekly was bullish. Now we see that the daily is also bullish. So we can weekly, daily, and then we can, of course, we need the 4 hour. So we scale down. As you can see, you can also see the internal structure is also very important. The internal structure, as you can see, as I told you, the higher highs and higher lows, this smaller steps is the internal structure. And as you can see here was the last small pullback on the daily time frame. So this was the daily internal pullback. It was the last IBOS. So from this perspective, the daily internal low was here and the internal high was here. And as you can see, the daily internal low, of course, it wicked the liquidity below this low, but it never closed below the internal low. So the daily stayed bullish on this case. So we are still bullish on the daily and of course on the weekly. So we are looking only for longs. You have to think in your head, we are only looking for longs. This is so important. You have to hammer it in your head, Always have in mind what the higher time frame are doing. So if we scale down one step further, 4 hour time frame, as you can see, here was the previous 4 hour boss break of structure, and then it made another break of structure here. The highest point was broken by this candle with a close. So this is the new swing range we are in. And by the way, this is not cherry picking. This was the last week from Monday. This is not cherry picking some day in the past, which looked nice. It was the previous week. And as you can see, now we have here, definitely, this is the last 4 hour swing structure. It's the last 4 hour strong low. Why? Because it did never, this was basically the last 4 hour swing low, but it did never close below. These candles, as all of these candles, they only wicked one time below, took liquidity, and then closed all above. So this never, the 4 hour never switched bearish in this case. But because it wicked the liquidity below there, the new swing low is a little bit lower in this case now, because you have always to cover the wick. Where then the new swing highs, we don't know. But what we can enter here, that also the 4 hour is also bullish, right? So H4 is also bullish. So you have always in mind, we are only looking for longs. The weekly is bullish, the daily is bullish, the 4-hour bullish. So normally in a healthy mind, it should it should never come in your mind that in this scenario you want to look for shorts, you know. Okay, what do we see now? As normally, shout out to other channels like Photon Trading. This is one thing I learned from him. He said, as soon as we get this break of structure, we expect a pullback on the time frame. Okay, in this case, we have a break of structure. So at any point, we are waiting a pullback on the time frame, you know. So what levels do we have? Mitigation levels. Maybe I can make another video in the future. This is very important. You have to always look which zones are mitigated. As you can see, the demand zones here, they are all mitigated. You see? Push to the upside, mitigation. 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 Push to the upside, no mitigation. So, what is the expectancy? The expectancy normally is that the market at some point in the near future will return to this level, mitigate this demand zone, and then maybe get this next drive to the upside, you know? So we have the buyers for all three bigger time frames completed, so we can switch to the execution time frame. This is, in my case, is the 15 minutes time frame. This was the Monday 7:30, because I personally trade London session, but the analysis I am showing you here, it works basically also on New York session. You can or an Asia session. You can basically trade whatever session you want. This is a universal principle, but for me personally, because of my daily schedule, London session fits the most for me. When I came to my desk at Monday morning, I saw, yeah, this was 7:30. Looked to the chart and I thought to myself, okay, this was the last push in the 15 minutes. We can also draw it in here. This was the last 15 minutes break of structure, because this low broke this high. This was the last break of structure to the upside. So I thought to myself, when the new week is starting, maybe we get a pullback. Maybe we get a pullback in this level, what we marked on the 4-hour time frame, and then get a new drive to the upside, right? Then when we move forward a little bit, this was the beginning at Frankfurt, 8 o'clock. And then I usually wait a little bit, because there was nothing really special for me, because as we already discussed in the previous video, if you saw it, the thing is, you have to always see the dealing range, yeah? This is the dealing range. This is the M15. In this case, the strong lower. The strong low, why? Because it broke structure to the upside, yeah? And when we look for the, you can draw in here the last, this is, don't confuse it, this is not swing structure, yeah? You can also draw in break of structure in the M15, but this is an IBOS. This is an internal structure, it's not the swing structure. Remember, swing structure is below down there. So this is very important to understand. Then the M15 at beginning of London, this is the last, this is the low which broke the structure to the upside. So this low got broken. As you can see, if you want to short, you have to first wait until, for example, in this case, Asia highs get liquidated, that the market is ready to drop, you know, because without liquidity for the market, it's not able to make significant moves. So in this case, we have both. We had here liquidation from the Asia highs and then an internal break of structure to the downside. So this was basically a good signal to maybe we get the pullback to this level down. But after we were a little bit into London, as you can see, we had here, it was a big rejection. And I thought to myself, okay, maybe it wicked only, there's also liquidity. I thought to myself, maybe it wicked only the Asia lows to get another push to the upside. So this momentum down was not enough down momentum for me basically to take the trade. I'm completely honest, this trade I completely missed. It would have worked out. You can learn from this. So it would have worked out. You can maybe trade it in the future if you want. So basically the idea was, this was the extreme supply. You could have taken a short from this supply, extreme supply, stop loss above the supply zone, and then target at least Asia lows. For example, this was a trade. It would have worked out, but for me, in this case, with this strong rejection wick, I didn't take the trade. But you can learn from this. It took liquidity, it switched breakout structure to the downside, yeah? What the most traders are expecting, there is a 1 hour gap here and the 4 hour gap here. So normally the markets are filling at least the 1 hour gap, you know, because the 1 hour order block, it's institutional level, and this normally should get filled. But in this case, this week was a little bit different, and I'll show you why. So the idea was, okay, basically I move a little bit forward, otherwise it would take too long. Then here came New York into play. As you can see, New York did the same game, but it respected the high. It only took liquidity above London session. You see, it liquidates the London highs here, but it respected the all-time high. And then it sold off. So if you had taken this trade, as you can see, you would have never got stopped out. And then, yeah, full take profit. And the thing was on the next day. So basically, from a bigger perspective, from the 4 hour perspective, at this point, we were basically expecting that the market builds this gap, at least in the 4 hour, and then makes this push to the upside. Because every time it does this, you see, push to the upside, pull back to mitigate. And on this case, I personally was expecting the same, yeah. And most of traders were expecting the same. This is the reason a lot of took a massive loss and wondered why. You see, the market did create two obvious double tops. This is a double top, and this was also liquidity, which is still not taken. Yeah? My first thought was, okay, we have now shifted bearish. Maybe this is a supply zone where I can short from, where I can get a new entry until this level, right? Like this. But this was not the case. And I'll show you why. So we are coming to on the next day to the market, and basically I thought to myself, okay, maybe we can here get a mitigation and then a drive lower. And then I was confused. Why was I confused? Because the basic logic behind it, when you have to imagine, when the market wants to go short, for example, okay, then it has to take liquidity. Because imagine when Asia is here, for example, Asia is here shorting, right? What do the stop losses mean? The stop losses mean buy orders. If you had a short order here and you got liquidated above, when you got liquidated here, for example, this means that a lot of buy orders get released into the market, right? And when big institutions want to sell, for example, they need opposing liquidity in the market, you know? So basically, if you are an institution and you want to sell from here, you need a lot of buying taking place, you know? And this is the reason why normally I would have expected that the Asia highs would get taken out and then the selling occurs, you know? But first, London went to the downside and liquidated the lows from Asia first. And this was for me a warning sign. Why? Because it makes only sense to liquidate the lows first if you want to get a push to the upside. Why? Because, for example, Asia, here a lot of people maybe have bought something and there are stop losses, you know, there are here stop losses. So what does the stop loss mean from a buy order? It means that your buy order gets liquidated, so you're forced to sell, right? So here were a lot of selling positions forced from the Asia lows. And if here are a lot of selling positions available, what will the big institutions most likely do? Of course, they will buy, because they need the opposing liquidity to make a huge buy position, you know? So this was the first warning sign that maybe we don't get lower in this case, right? And then I noticed some other thing. When you draw the premium versus discount tool from the high to the low, then you can see that London wicked exactly in the discount area and then got a rejection. This is the part I also didn't get in the beginning of my supply and demand journey, or in the beginning of my trading journey. And I'm still struggling with this, because I don't know why, but your brain is wired in this way that when there is a gap, you always want to see the gap closed. I don't know why, but the thing is, it's also possible, supply and demand, that sometimes it only mitigates the sell to buy range, the whole range, you know. This was the whole sell to buy range, and what a coincidence, the sell to buy range is exactly on the 50% level. And when a market is strong trending, then sometimes it's only retracing just to this equilibrium line, just to the 50% mark. It taps into the demand, to the discount area, just at a small little tap, and then it moves further to the upside if the buying pressure is strong. So, and this is exactly what on this day occurred. As you can see now, London started to get the momentum, and as you can see, after liquidation from these lows, it made an M15 internal breakup structure to the upside. What does this tell us? If you are completing the whole picture, we are in the premium, strong momentum, weekly, daily, 4 hour is all bullish. We are pulling back just to mitigate the sell to buy range and just to mitigate the 50% mark. And then we get bullish momentum to the upside. You know, we get a bullish breakup structure to the upside. And in combination, the next confluences, we have double tops here, which are not liquidated. There's liquidity. And this was exactly the thought process. So then we have a new dealing range. This is the M15. So this was the range we are now in. And this is the strong lower. So then I thought to myself, okay, when the market wants to move to the upside, basically from this, where is the logical point to get in the trade? And then you do the whole mitigation game again. Here, push to the upside, mitigate it. Push to the upside, mitigate it. Push to the upside, basically mitigated, you see? But the only thing what's not mitigated was this here, right? You see that these 2 weeks, they overlap, right? This week and this week, they overlap, but this week, it was never retested. And this was exactly the trade I took. I placed my long here, stop loss with a little bit buffer below the zone, because it's always possible that the market will wick a little bit below there and then target the week high, the liquidity above. And then, as you can see, the market taps in perfectly, and then it moves to your target pretty quick, you know. It took about, how long did this trade took? About 4 or 5 hours. Really simple. Then you have to be really cautious and careful where the mitigation and where the shift in structure occurs, right? If London would have first moved to the upside, for example, liquidated Asia highs first, then I would have looked for a short, you know. But the thing is, it liquidated the downside first, and then mitigated the equilibrium, and it tapped into the bigger sell to buy range, which we have on the 4 hour, right? On the 4 hour, you see it? It perfectly mitigated the sell to buy range, and additionally, this was exactly the decisional demand. I don't know if you are familiar with this, but basically, there are 2 zones. There are basically 2 areas. One, the extreme zone, when the market moves to the extreme, or the second option is the decisional zone, which is directly in charge of the break of structure, you know, because the break of structure occurred from this demand zone. This demand zone decided to break the structure to the upside. So here's the big money in, a lot of big money in, and decided to drive the price more to the upside. And then this was the decisional sell to buy week was mitigated. And then, as you can see, of course, you can't let the order open for too long, you know, because otherwise you would get taken out here, as you can see. But for the day, this was the first clear target for me. Only target this liquidity here above, and this was, I think, 6 hours or so. And I'm very happy with this trade. It's enough for me. and it's not that easy from a mental perspective to hold, because when you want to hold it to the fences, you know, yeah, when is really the point when you close the trade, you know, this is not very clear, and then suddenly it drops massive against you, you know. This is so basically I took around here my profits, and this was about around 6R, and yeah, I was pretty happy with the trade, and I hope you understand why it was more likely that the market goes up, because it switched clear the structure after it has mitigated the 50% level, you know. The one big learning I had in the beginning, you have to always recognize what the internal structure from the middle time frame is doing, yeah, and trade in this direction. If you like this video or this type of content, subscribe to the channel, activate the notification bell, and leave me a comment and a like how I can help you in the future. We see us in the next video.